going into our afternoon, but I thought this afternoon would be a good time for us to review the longer term timeframes and to really dive into where we are in time and price in relation to the Federal Reserve's rate cutting cycle and the frequency of sell-offs and rallies that we have around the Fed pivots. Now, we've done a study, and this webinar is on the website, the Fed pivots. We studied back into the last 14 rate cutting cycles that the Federal Reserve did. And over that, into the 1940s and into the present, there's an average of an 11.07% rally after the Federal Reserve's rate cut. An example of the last one is that we had a cut in September 19, 2024. We had a 10% rally. Now, it wasn't exactly 11.07, but it was a 10% rally. And then exactly a year ago this week, actually, we dipped into highs and then started this amazing sell-off back into 2022's lows to highs. And the reason I want to explore this is because right now, we have these little variations. You can see this large consolidation that we had at the end of 2024 going into the beginning of 2025. We have a similar type of consolidation up here right now. We were in long setups at the time. We had made new highs. There were new extension long levels that had reactivated themselves and actually found a bit of participation here. But we went into the end of February, and it was actually a Friday here, the 21st, into a Monday, the 24th, and we were selling off into the end of a week, and we broke the extension long levels. And then we had these brand new 50% shorts. Now, this was a year ago where we had run back up into a larger traditional short setup. But what I want to explore with you real quick is what it looks like in relation to a very similar type of situation that we had in 2022. Now, 2024, we didn't necessarily have a dollar strength trade that was going on. The end of 22, we were inside of these larger pullbacks. Notice that these little white ovals here, these are really actually correlated with the beginning of the crypto winters. Dollar strength has had a much bigger effect on the cryptocurrencies than it actually has on the indices. But going into the end of 2021, going into 22, you can see here that we had a dollar strength trade going on. We had a dollar strength trade going on going into the end of 2024, going into 25. We have a dollar strength trade going on right now as we're dipping into a previous low here at the beginning of 2026. And what that correlates with is the VIX is inside of this huge short setup, as you can see here. But I want to take you back here to where we were prior to the tariff VIX rally and indices sell-off, where it lost 20% of its rally. At the time, we were inside of this big 50% short. And there was a huge resistance level that we were inside of. And we had downside targets. Nothing really looked like it was going to get in the way of the indices continuing to make new highs, except when the extension broke. And when you zoom into this price action, I'm going to go down to a 4-hour chart here, so it's a little bit easier to see this. But when we were coming into February, the middle of February, this stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.